Hello and welcome to this discussion on sustainability in Treasury with myself, Nigel Owen, Head of Corporate Origination here at TreasurySpring, and my special guest today, Joanna Bonnett, who brings a wealth of experience in Treasury and a variety of vantage points actually from which she's observed sustainability's role within Treasury, not just as a treasurer, but also as former president of the Association of Corporate Treasurers, and now founder of the Strategic Treasurers Alliance, of which we'll come to later, I'm sure. But welcome, Joanna.
Thank you for having me today.
No problem at all. And thank you for watching today. It is part of a series of interviews running alongside our Sustainability Impact Report, the fourth edition of which we recently published and you can find on our website or on our LinkedIn feed. If you do have a look, please do give us some feedback. But you're not here to hear about me today. You're here to hear from Joanna and her perspective. So Joanna, let's start by setting the scene. What did you see as the key trends and shifting priorities in sustainability in 2025? And how have you seen sustainable finance strategies evolve in various organisations that you've seen over the last year or so?
So if we look at 25, we can't ignore the shifting geopolitics that was on the global scale that absolutely influenced us here in the UK, but businesses around the world, and it certainly did influence the sustainability agenda. I saw that various organisations, while they've got really strong sustainability programs in place, that perhaps maybe they weren't talking about it as much. It became more in-house. Let's keep the good work. Let's keep doing what we need to do. But perhaps they weren't publishing as much as they were historically.
Okay. And against those changes, what do you see as the main challenges that they create in terms of progress, in your opinion?
It's a good question. So I think it depends on what lens you're looking at it. So if you were a prospective employee looking towards an organization, if you're not actively articulating what you're doing, where you're heading, and where and how that employee can be part of that agenda, you may miss out on really good talent that you may otherwise have had. So I think there's from a lens of an employee, how do employees become engaged and part of that journey with you as an organization and sparking that innovation and ideas. I think the other side of things is if you look at really long term, structurally, where is that organization going to be in 20, 30, 40, 50 years' time? There's some really structural sustainability questions there. So if you're an agricultural business, where are your crops now? Are they going to be the same crops in the future? And if they are the same crops, are they in the same location? Or do you need to perhaps change continent or country, things like that? And so as an organization, you need to have those really challenging, really structural, long-term conversations. And within that, if you're not talking about it, how do you know where you're heading? So again, if conversations are internal, that's great, and they need to continue. But if you're not having them, again, with some of your wider stakeholders, whether that's your suppliers, your customers, or in the context of Treasury, your banks, how can they build into that partnership? How can they understand where they are heading along your same strategy lines?
Sure. And as ever, though, those challenges presumably bring opportunities as well.
Yes, absolutely. And I think it is exciting. Things can move between different countries or different regions, different geographies. So it means that you'll be able to tap into new talent, new areas, new product lines even. So the world always evolves and it will continue to evolve. And that's where the opportunities for, say, the green agenda will provide a lot of new opportunities. But I think where there are new opportunities and new opportunities for individuals as well as organizations, it's important for us not to forget who perhaps has been left behind. As an organization, we have a responsibility for the communities that we had previously supported, particularly if a company is operating in a very localized area. Where will those replacement jobs be in the future? So if you are removing yourself as a corporate from that geography, well, what's going to happen to that local community and how can you help that community transition?
You mentioned products there. Yes. TreasurySpring, we're obviously focused on short-term liquidity, which is a key area of focus for treasurers. So for treasurers of, say, listed companies managing short-term liquidity, how can sustainable financial principles realistically be applied without compromising financial flexibility or returns?
So this is where we get back to the STA, so the Strategic Treasurers Alliance. About 2-3 years ago, there were conversations between me and a couple of other treasurers trying to address the very point that you are talking about. How can we invest sensibly? What does this look like? And if I look back 5, 6 years ago, there were the beginnings of these conversations when we were engaging with money market fund providers. And now, about, again, 2 years ago, we were looking at what can we meaningfully do? What can we do as treasurers to change this? So about a year ago, we formed more formally, and that's where the Strategic Treasurers Alliance actually started. There's about 20 of us in this group. It's absolutely on a no-names basis, but it's about treasurers saying, I individually have a very sustainable mindset, or perhaps I work for a company where sustainability is absolutely at the core of their ethos. Equally, it could be also with treasurers that want to learn more. How do I think about my investment strategy in a slightly different way? So what we've done over the last year is we have looked at our own money market fund or cash admissions. What does that mean? When I invest money in a bank, whether, again, money market deposit, money market fund, my cash at bank, what is that money doing? Treasurers have always understood yield, risk, so we understand that. But through a new lens, from the environmental lens, what does that mean? Where are perhaps our investments in more green or sustainable products versus perhaps where they're not? And what did that look like? And so the group of treasurers, we've got about 600 billion in market cap between us. So they're big names, big organizations. But from a treasury perspective, really complex cash needs as well, and a huge variety of difference between us, because we're not all located in the UK. There are treasurers from with a global footprints. So what did that mean with our emissions? So we've actually internalized this conversation. What are our cash investment emissions? What do they look like? And how do I differ from perhaps you? And we're looking at that. What are our lessons learned? Was this an easy process? Do we understand how we rated or reported and calculated our emissions? But also, what were the decisions that I perhaps made when looking at my cash balances versus, say, the ones that you may have made? So we're working all of this through. So at the moment, we are trying to write a framework for treasurers to say, if you would like to understand your emissions, this is the framework where you perhaps can make different decisions. This is how you would actually calculate your own treasury emissions, obviously associated with cash. And it allows other treasurers to look at this. It allows the treasury professional organizations, such as the Association of Corporate Treasurers, to embed this as part of their education. So this will just become, in my mind, or my wish, business as usual. And it means that when we report cash balances, we understand we get the bank statements automatically through to our TMS. We also get the credit ratings automatically through. So we know our funds in AAA, BBB, whatever that looks like. In times in the future, we will also get the CO2 emissions automatically fed through. So I think it becomes a self-fulfilling prophecy. At the moment, we are engaging with banks. We're currently piloting a set of questions with 3 well-known banking providers and their money market fund arms. And we are then going to go to a much larger group of banks to say, how do we, as a well-qualified, well-educated treasurer, how do we understand your emissions? Because we need to know this through, know your customer, but in reverse to the banks. And so if you can rate your own emissions in your money market funds, if you don't like what that result is, perhaps, then we're also going to educate treasurers on how do they look at their money market fund providers and perhaps make alternative or more sensible, sustainable decisions for the Treasury team. This is all good and well. What's actually happening on a day-to-day? So we're educating some treasurers. We're doing a lot of piloting between ourselves. We've already had 3 very large, well-known brands already change their treasury policy attached to cash. We have had multiple conversations with banks, and we have had in one organization close to 50 people engaged in this conversation. So it's not only the Treasury team, but the sustainability teams are also involved. So this is a bit of a domino effect. Where do we end up in 2 or 3 years' time? Who knows? But at the moment, we would like to get that message out and making sure that other treasurers can make informed decisions, whatever they may be.
It's felt like for a while there's been a gap between the, should we say, medium to long-term cost of not having sustainability versus the short-term cost of missing out on a few basis points.
Yes.
Feels like this is closing that gap a little.
I would hope that certainly a desire. That there's academic evidence out there to say that banks that have more sustainable reporting themselves, they actually themselves have a lower cost of capital. And so why are they not passing that through to us as, I'll say, individuals in society, but certainly the corporate treasurers? Why is it not being passed through to us? So I agree. Let's get those basis points removed and make sure that we can make informed, valid decisions with whatever that looks like.
Okay, interesting. And given all that and what you're seeing emerging from the STA and the work it's doing, what are the most material sustainability trends you believe we'll see this year when it comes to shaping capital allocation and corporate treasury strategy?
Right. I think we can't ignore debt financing. The capital allocation strategies of organizations are not only vital to the organizations, but their long-standing relationships with banks. And we need to make sure that we understand what that means. There has absolutely been a pushback on perhaps more sustainable debt products. Let's call it the green bond, the social impact bond. They have become less attractive to treasurers over the last couple of years. Now, some of this may be a result of initial hype when these products came to the market, and I think there's an element of that. But equally, there is obviously the world rhetoric that is coming out of other geographies that is also influencing treasurers to say whether they would engage with a green bond or not on certain occasions. Some organizations are continuing, and I think that is really good, and it does need to continue as these products mature in the marketplace. But there are challenges, and it's beyond the confines of Treasury, those challenges that are influencing treasurers today.
You mentioned green bonds there. They've obviously evolved over 10, 15, 20 years that they've been in place now. And the definition of green's changed through that. How do you see the definition of green or sustainable changing over the next 18 months? Or are we at the end definition now? And perhaps crucially, if we continue to see the momentum in it, how do companies remain not just compliant, but credible too?
So a really good question. I think the regulation within sustainable reporting or sustainability reporting has changed dramatically over the last 2 or 3 years, not only here in the UK, but also if I look towards the EU. In the EU, there has been an introduction of CSRD reporting, which has put a significant difference in the landscape for the financial reports that European organizations must publish. And it means that we now have auditors validating the claims, the aspirations, and say the transition plans attached to the sustainability reporting and the numbers. This is a huge difference compared to where we were perhaps, say, in 2020. What it means is that there will be further consolidation in, say, sustainable financing, green financing, because those numbers are now validated as part of a matter of course, like the financial reports as well, the numbers that sit in the annual report and accounts. So I think there will be changes in the rating space for sustainability. There will certainly be a consolidation of players. There's a lot of people in that space now, so that will continue to change. But how do organizations remain credible? This is vital. This is their social license to operate. No one wants to be accused of greenwashing. And if we look at sustainability in the wider sense, it's not just about their environmental claims. It's also what's their impact on society, the local communities wherever they operate. That will also become just as vital. So where will green bonds perhaps go in 18 months' time? I think we will continue to see a lot of what we've got now. There's a huge change in that political landscape over the last 12 or so months. That will continue to dominate this conversation. But equally, and I'm going to fast forward from 18 months to maybe 10 years, sustainable businesses, businesses that will have valid transition plans, that will become business as usual when banks look at us. And I'm already hearing this from bank directors, certainly compliance officers, heads of sustainability at large banks. They are already factoring into sort of their credit risk assessment of organizations. Do we want this CO2 emissions attached to this business on our balance sheet from the bank's perspective? So there have been instances of banks walking away from deals. So for corporate treasurers, they must know what their sustainability agenda and strategy is. But if they've got those meetings with banks, they also need to bring in their chief sustainability officer or their head of sustainability to make sure that that narrative is really clearly understood by the bank, and that they will be able to get their proposition, whatever it is that they're doing, their project finance or their M&A or whatever it may be, across the line. And I think that will continue.
I'm sure across your career and your time at the ACT, you'll have recognised that we get treasurers who have hugely different mandates. We have treasurers in large companies where changing Treasury policy can be a big deal and a lengthy process. There are treasurers who are the sole person responsible for Treasury and have to do everything and more, yes, in many cases. So they may be watching this thinking, I want to do something now, but it's something else and it's going to be difficult. Mm-hmm. Where or how would you point them to start the process and get things moving?
I would always say go to industry events, conferences, watch podcasts and videos like this. So you can easily fit that into the day job, a podcast on your way home, perhaps on your commute. If I look towards more the Association of Corporate Treasurers, they do have a short course on sustainable finance. I think that's a great way of getting a bite-sized chunk, particularly if you've done your qualifications maybe 20, 30 years ago. Well, this happens to be a bit of a refresher. It demystifies some of the acronyms in the process, or, what's the flavor of the month. I also think if you've got that little bit more time up your sleeve, perhaps you're not the one-man band treasurer, but you've got a team, I think engaging with like-minded people. So like joining the STA, where you can get information. Other people are perhaps running the project. Of course, we'd always welcome more people onto projects, but we've got people that are there. They're looking at this. They're deeply passionate about Treasury, but also sustainability. And like I mentioned earlier, we're planning to issue frameworks and toolkits for the Treasury community at large. So it means that there will be opportunities to learn in bite-sized chunks, even from other treasurers. And I think it's about that connection. It's about talking to other treasurers. What has worked, what hasn't worked.
And it can quite often feel that we need to shift corporate policy and corporate approaches to these things. But presumably there are also still things we as individuals can influence on sustainability, perhaps with pensions or investments.
Mm-hmm. And that also lends into why we're looking at the CO2 emissions attached to the cash investments. A lot of treasurers are also responsible for the pensions of organizations. And so what we were hoping is this mindset, this knowledge that they're building, that it can be transferred into the pensions. So that's still within the work context. Us as individuals, we also have an individual responsibility to influence what we can, no matter what that is, no matter where we are in the world. Our roles are vast, our roles are diverse as treasurers. We engage with different providers, software providers, banks. So where can we also keep that conversation moving? Because it may not be about sustainability from a green perspective. It might also be about the people side of things. How do we have diverse treasury teams? What does that look like? And how do we make sure that our diversity is also represented in our counterparts, say at the banks? What does your banking partnership look like? Because ultimately, as a treasurer and part of a treasury team, we want the best opportunities for the company that we're representing. The only way we're going to get the best outcome is having diverse people around that table and really making sure that those products or projects, whatever we're developing, are the very best that they can be.
And presumably that's it, really. It is a case of completing the circle and shifting the individual mindset to ultimately a group or company level.
Absolutely. And a treasurer, we aren't responsible for the sustainability strategy of the organization, and we can't pretend to be. That's why we've got experts in the sustainability team. But within Treasury, we are responsible for, like you say, the capital allocation, the investment emissions. We're also responsible perhaps for insurance as well. What does that look like from an organization perspective, from a risk perspective? And what do the pensions do? And does that reflect the will of your organization?
Great, Joanna. This has been really insightful. Thank you very much for joining us today. If anyone wants to find out more about the Sustainable Treasurers Alliance, what's the best way to do so?
Right. We are on LinkedIn. We have also just set up a website. So you can find us. There are several of us out there talking about this. You're certainly across 26. You will see us at all the large Treasury conferences. So you will find us very, very easily, but definitely on LinkedIn and on our website.
Great. Thank you very much for that. Thank you, everybody, for joining us today. If you want to watch more of these or find out more about our sustainable products at TreasurySpring, please check out our website where you can find out more about our partnership with the London Stock Exchange Group in this field. But for now, stay sustainable.